Welcome back to our exciting blockchain series on EduTube. In our first two videos, we explored what blockchain is and its fascinating history and evolution. Today we are diving deep into the core features that make blockchain a revolutionary technology. These features are why blockchain is reshaping industries, enhancing security, and building trust in ways we've never seen before. So, what makes blockchain so special? Let's break it down in simple terms with relatable examples to help you understand. Blockchain's unique attributes set it apart from other technologies, and understanding these features is crucial to grasping its true potential. Whether you're a beginner or just curious about how blockchain works, this video is for you. 1. Decentralization. Imagine you're organizing a group trip with friends. Traditionally, one person acts as the leader, handling all the plans, bookings, and money collection. Everyone relies on this one person, but what if they make a mistake or misuse the funds? That's centralization. In contrast, blockchain operates without a central authority. Instead, control is distributed among all participants in the network. This is like every member of your group having equal access to the trip plans, tickets, and payment information. Everyone verifies and agrees on each step, ensuring transparency and reducing the risk of errors or fraud. Additional examples. Think of a multiplayer online game where each player's moves are logged and validated by all participants instead of a central server. Consider a neighborhood library where everyone contributes books and maintains the catalog together, rather than relying on a single librarian. Why it matters. Decentralization removes the need for intermediaries like banks, saving time and costs. It ensures the system remains operational even if one part of the network fails. This feature fosters innovation by empowering individuals and small businesses to participate in the digital economy without gatekeepers. Second, transparency. Imagine ordering a package online. With traditional systems, you might struggle to track its exact location or the status of your payment. Blockchain offers complete transparency by allowing all participants to view and verify transactions in real time. Think of it as a shared Google Doc where everyone sees the updates instantly. Once information is added, it becomes visible to all authorized users and cannot be hidden or altered without their knowledge. Additional examples. Imagine a charity organization using blockchain to show donors exactly how their contributions are being spent. Consider a school where exam results are stored on a blockchain, ensuring students and administrators can verify their accuracy. Why it matters. Transparency builds trust between parties. It's especially useful in industries like supply chain management, where tracking goods is crucial. It ensures accountability, reducing corruption and fraudulent practices in various sectors. 3. Immutability. Have you ever wanted to go back and change something you wrote in a diary? On blockchain, that's not possible. Once data is recorded, it's permanent and cannot be altered. This feature is called immutability. Imagine a digital notebook where every page is locked after you write on it. Even if someone tries to tamper with it, the system will detect and reject the change. This ensures data integrity and security. Additional examples. Think of a receipt for a purchase. If the receipt is stored on a blockchain, neither the buyer nor the seller can modify it later. Imagine a voting system where each vote is recorded immutably, preventing any tampering or double voting. Why it matters. Immutability prevents fraud and unauthorized changes. It's vital for industries like finance, where accurate records are essential. It provides a reliable audit trail for regulatory compliance. Fourth, security. Picture a vault with multiple locks, and each lock requires a unique key held by different people. Blockchain security works similarly. It uses advanced cryptography to secure data, making it nearly impossible for hackers to break in. Each transaction is encrypted and linked to the previous one, creating a chain of secure blocks. This layered protection makes blockchain one of the safest ways to store and transfer information. Additional examples. Imagine your online bank account being protected by a system where every transaction needs multiple levels of verification. Think about storing sensitive medical records on a blockchain, ensuring only authorized personnel can access them. Why it matters. Enhanced security protects sensitive data like financial transactions and personal information. It's a reliable solution for combating cyber threats. Blockchain security features make it ideal for critical applications, such as defense and healthcare. 5. Consensus mechanisms. Have you ever played a game where everyone had to agree on the rules before starting? Blockchain relies on a similar concept called consensus mechanisms. These are methods used by participants in the network to agree on the validity of transactions. For example, in proof of work, POW, participants solve complex puzzles to validate transactions. It's like solving a riddle before moving to the next round of a game. Other mechanisms, like proof of stake, POS, allow participants to validate transactions based on the number of coins they hold. Additional examples. Think of a neighborhood watch group where everyone has to agree before reporting an incident to the authorities. Imagine a team project where all members must approve changes to the plan before implementation. Why it matters. Consensus ensures all transactions are verified and trustworthy. It prevents fraudulent activities within the network. Different consensus methods offer flexibility for various use cases, from energy-efficient systems to high-security environments. 6. Smart contracts. Imagine renting a car. Traditionally, you'd sign a paper contract, rely on the rental company to fulfill its terms, and hope there are no disputes. With blockchain, smart contracts automate this process. A smart contract is a self-executing program where terms are written into code. For instance, once you pay the rental fee, the smart contract automatically grants you access to the car. There's no need for intermediaries or manual verification. Additional examples. Think of a vending machine. You insert money, select an item, and the machine delivers it automatically. Smart contracts work similarly. Imagine buying a house where the deed is transferred to you instantly upon payment, without needing a middleman. Why it matters. Smart contracts save time and reduce costs. They eliminate the risk of human error or bias. They're revolutionizing industries like real estate, insurance, and supply chain. 7. Traceability. Think about buying organic vegetables. How can you be sure they're truly organic? Blockchain provides end-to-end traceability, allowing you to track the product's journey from farm to table. This feature is particularly valuable in industries like food safety, where knowing the origin of goods is crucial. It ensures accountability and authenticity at every step. Additional examples. Imagine a clothing brand using blockchain to prove its products are ethically sourced. Consider tracking a piece of art to verify its authenticity and ownership history. Why it matters. Traceability enhances product quality and safety. It helps businesses and consumers make informed decisions. It supports sustainability by ensuring transparent sourcing practices. 8. Cost efficiency. Consider how much you pay in fees when transferring money internationally. Blockchain significantly reduces these costs by eliminating intermediaries. For example, sending money through a blockchain network is like handing cash directly to the recipient without involving a bank. The process is faster, cheaper, and more efficient. Additional examples. Think of running a small business and using blockchain to process payments without paying high transaction fees. Imagine freelancers receiving international payments instantly without costly delays. Why it matters. Cost efficiency benefits businesses and individuals alike. It makes services more accessible, especially in underbanked regions. Lower costs drive innovation by freeing up resources for other investments. 9. Speed. Traditional banking systems can take days to process transactions, especially across borders. Blockchain accelerates this process, completing transactions within minutes or even seconds. Imagine transferring money to a friend abroad in real time, without delays. Blockchain speed ensures quick and seamless transactions, making it ideal for a fast-paced digital world. Additional examples. Think of selling stocks and receiving your payment instantly. Imagine healthcare providers instantly sharing patient records in emergencies. Why it matters. Faster transactions improve user experience. It supports real-time operations in various industries. Speed enhances competitiveness in global markets. 10. Accessibility. Finally, blockchain is accessible to anyone with an internet connection. You don't need a bank account or specialized tools to participate. This inclusivity makes blockchain a powerful tool for financial empowerment. Think of it as opening the doors of opportunity to people worldwide, especially those in underserved regions. Blockchain bridges gaps and creates equal opportunities for all. Additional examples. Imagine a farmer in a remote area using blockchain to sell produce directly to buyers. Think of students accessing secure online certificates without relying on institutions. Why it matters. Accessibility empowers individuals and communities. It drives global adoption and innovation. It helps reduce inequality by providing tools for financial inclusion. Conclusion. To wrap up, the key features of blockchain: decentralization, transparency, immutability, security, and efficiency make it a revolutionary technology that has the potential to redefine industries and reshape our daily lives. By enabling trust without intermediaries, blockchain empowers individuals and organizations to conduct transactions with unparalleled confidence. Think about how decentralization is already reducing reliance on centralized entities, or how transparency is holding institutions accountable like never before. Consider how immutability ensures that your data remains tamper-proof, creating a digital environment built on integrity. These are not just technical concepts. They are building blocks for a more equitable and efficient future. As we continue this series, we'll dive deeper into the specific applications of blockchain in industries like healthcare, finance, supply chain, and more. You'll see how these features come alive in practical scenarios and change the way we interact with the digital world. So, stay tuned for the next video, where we'll explore how blockchain works, unpacking the inner mechanics of this groundbreaking technology. And remember, on EduTube, we're committed to bringing you clear, simple, and engaging explanations of complex topics. The future is being built on blocks, blockchain blocks, and understanding these features is your first step toward becoming part of that future.